Hello and welcome to SwitzerTV. I'm Peter Switzer, and this week we go searching for stocks that look like real value, and we get the experts to give us their favourite stocks right now, and I get them to rate a number of stocks that you've been asking us about. Bravura Solutions, 63.7% upside according to the analysts. MNF Group, minus 3%. Ordinate, plus 15.7%. Vita Group, no one rates that one. Monadelphus, plus 4.7%. Let's just see what the experts think. Joining me will be Prime Value Portfolio Manager ST Wong. He'll talk about the stocks he likes. He often goes looking for really interesting companies, often well-known companies that have been beaten up. Be interesting to see what he's got. Junbei Liu will look at the stocks that she likes, but also look at those ones that you've asked us about. NabTrade's Gemma Dale will tell us what the online broker knows about what stocks people have been buying, because they see what you're buying, and the ones that they're selling. Apparently a lot of smart young players are looking at US stocks in particular, and it's not Apple. We'll tell you what stock is the real favourite amongst the buyers of foreign stocks on NabTrade. And of course we'll start with Julia Lee from Blooming Invest, who also will look at these stocks that you've been asking us about, and I'll get her to talk about Mesoblast. Welcome to the program, Julia Lee.
Great to be here, Pete.
Now, Julia, I've got lots of stocks I want to ask you about, but you know, you've actually developed cult status because of your link to Mesoblast, and I know even Andre Chan behind the camera here wants to know what you think about Mesoblast going forward. And I said to him that I think you're of the belief that one day it will get an FDA approval, and the other two products they've got will have a lot of interest from other companies as well. But better you tell it than me, because a lot of people are hanging off every Mesoblast word you say.
I do like Mesoblast, but it's been a very disappointing month in terms of news flow. And I guess looking forward, there's a few things that we're watching for, which is phase 3 results from its lower back pain, as well as phase 3 from its heart failure trial as well. So there are a number of catalysts, but it looks like a bit of a longer wait till commercialization of any product in the US, given the failure of its 30th of September date. So a big disappointment there, not only in terms of the timeline of commercialization, but also for the share price. But I think the rest of the portfolio, thankfully, has been doing really well and has been making up for that. So we've been seeing a really good month for shares like Linus, Megaport, BlueScope Steel, which have all been performing very well for the fund. We also hold Boral, so just watching up for that update at its AGM on unlocking some of that value there.
Okay, I know my wife Maureen bought Megaport after listening to you. So do you still like the company?
Yes, I actually bought some more today, Pete. Okay. They are due to give a first quarter update in terms of revenue and sales. And look, Pete, I've talked about NextDC a number of times before, and that structural trend of using more data and moving to the cloud. And Megaport's on a similar trend, except it's less capital intensive. So what it does is it allows companies to use data centers and data with a number of different providers. So they've signed up to hundreds of different data centers around the world in hundreds of different countries. So not only can a company or an individual move data to a particular data center, but also from data center to data center. And basically the user only pays for what they use, which means that when you do need an extra allocation of data or more capacity, it's very easy to switch on. So look, Megaport in the last financial year, revenue was up by about 66%, which was a record. And I do think that momentum is going to continue because we are in a world that's data hungry.
Yep. And they don't need FDA approval either. Okay.
Thanks for that, Pete.
Let's go through a bunch of stocks that some people have been asking us about, particularly in our Boom Doom show, which is on Thursdays. Bravura Solutions, what do you think of that company?
Look, this is in the wealth management space. They also look at fund administration, and recently they did do an acquisition of Delta over in the UK. I think the thing to remember about Bravura at this point in time is that most of its revenues do come from the UK. So I think it's about 63% of the revenues from the UK. And we know there's lots of things happening in the UK at the moment. We're looking at more lockdowns because COVID-19 cases have been soaring. And also we're looking at the uncertainty of Brexit once again. So economically, things are quite uncertain over there. So I do like the stock, but I don't think there's any rush to buy into the stock at this point in time, given the COVID-19 cases and the lockdowns, which will probably mean that businesses delay making major decisions. So look, this is probably one that I'd revisit in 3 to 6 months' time.
MNF Group.
My net phone, I actually use my net phone, and the reason I like it is that I don't have to connect to a copper network for phone services. Instead, I have the business phone on my computer and I have an app on my mobile, so I can answer the phone call from anywhere. I've got my laptop or my iPhone. So basically it is over the internet rather than the copper cables, which means less hardware and more convenience. So look, I like Netphone. It's not only phone services, I think they do internet as well as fiber as well. So not only for individuals, but for businesses. And look, this is all about cloud communication. And I do like this story. They did see a record FY20 result where EBITDA was up by 27%. And look, this is just the way I think that communication is being done now. So on the right trend, and I do like this stock. Right. I use it.
All right, AD8, Ordinate Group.
This is professional digital auditing, audio networking. So in the old days when you had an event, and I remember the old days when I had an event, you'd have the speakers and then you'd have to connect up all the cables and then you'd have a mixer. And it would be quite complex. There'd be cords everywhere and wires everywhere. But Ordinate is the new modern day version. So no wiring, it uses a computer network instead to get the signals out and the audio out. And really this is usually used for larger scale events. So things like conference centers, churches, big sports events, concerts, amusement parks, even the zoo when you're looking at those loudspeaker announcements. And look, this is once again riding that wave of the future, the digitalization trend in the area of audio. So this is another one that looks good. And look, I think that structural trend is in place. And if you've got that momentum going with a good product like Ordinate does, I think that momentum will continue.
In fact, I remember an old event where you and Roger Montgomery had a set-to argument in Melbourne. It was the day that America lost its AAA rating and everyone was panicking, wasn't it? It was an investment show. And there were plenty of...
We have lots of friendly debates.
That's right.
I love a good debate.
It was a great debate. Now, Vita Group. What do you think of Vita Group?
Vita Group has a number of different businesses now. So they're a Telstra reseller, so they've got the retail component. They also have the Sprout brand, which looks at baby products, and also their health and wellness brand as well. So look, health and wellness is where a lot of the growth has been. It was up 47% on the last update, whereas retail was up by 5% and Sprout was up by 14%. But when you're looking at Vita Group, it is all about retail because that's where most of the revenue comes from. $752 million of the revenue comes from the retail component. So Telstra is very important, whereas the health and wellness, where the big growth is, well, only $1 million of that comes from that section. So I guess in terms of being a Telstra reseller, it depends on the momentum there. And right now we are seeing relatively low levels of growth. So not very exciting. The share price is moving sideways and I can't really see a catalyst for the stock to break out of that sideways movement. So I think there's better options out there for growth on the market.
Yep. And a company that you liked when its share price was low and it reacted nicely was Monadelphus. What do you think now about Monadelphus?
Yeah, I still like Monadelphus. We prefer ALS in that mining services space, which looks at global testing, and we've seen, the lead indicators for the mining sector picking up, whether it's in terms of financing or capital raisings. And I think we are going to see a mini commodities boom on the back of building infrastructure to try and get the global economy going. So mining services companies should be a beneficiary of that. So positive on Monadelphus in that area. Australia. It has big clients like BHP Billiton, Rio Tinto, Chevron, Woodside Petroleum, and I guess traditionally its revenues have come from coal, iron ore, as well as the oil and gas space. The positive thing is it is trying to diversify its revenues, so it is moving into areas like renewables as well as water, but that is a slow journey. The only real huge risk that I would see here is that Rio Tinto is trying to get $493 million in losses and damages. Rio Tinto, of course, is a long-serving client, so my view is that they'll probably come to an agreement, and hopefully that's covered by the public indemnity insurance that Monadelphus has, which is up to $150 million. So look, I am positive. I prefer ALS in that space, but I do think there is going to be a global commodities boom on the spend in infrastructure to try and get that global economy moving again.
Yeah, and Julia, I guess if a vaccine does show up, and there's been some good vaccine news over the weekend, and the global economy starts to rebound in 2021, that commodities boom will also be helped by that.
Yes, absolutely. Let's hope there is a vaccine soon, because the COVID-19 cases unfortunately are moving in the wrong direction in Europe, the UK, as well as the US. So watching that very closely. The other main catalyst for the market is stimulus. I mean, looking at the Australian share market this month, it's been absolutely incredible. There's only been 2 negative sessions in October, and the market's up just over 7% for the month. And that's really because of the stimulus that was announced earlier on in the month. And if we see the same thing in the US, and what we're watching is for the passing of the CARES 2 package, it's probably going to be after the US election, but that much money being pumped into the economy is good news for asset prices. So that would be a positive for the US stock market and stock markets around the globe.
Yep. Locally, we'll call it the Freudenberg Rally. Julia Lee, thanks for joining us.
Thanks, Pete.
This episode was brought to you by WCM Investment Management, a California-based global equities manager with an outstanding long-term track record. This chart shows the significant outperformance of WCM's quality global growth strategy over the past 1 year, 3 years, 5 years, 10 years, and since its inception. Investors can access the strategy via the ASX with their choice of an exchange-traded managed fund, WCMQ, or a listed investment company, WQG.
Well, I'm catching up with June Bailey, Portfolio Manager at Tribeca Alpha Plus Fund. Good to see you, June Bailey.
It's great to be here, Peter.
The market's up today. Have you worked out why, or do you not worry about why?
That's right. Only goes one direction. Look, honestly, there's a number of things. There was the vaccine positive news out of the vaccine over the weekend, so market got a bit excited. So we are seeing a lot of reopening theme stocks or company that's benefiting from reopening is doing pretty well. And of course, we also heard good news out of Victoria, where some of the restrictions have now been relaxed. So again, giving some of those stocks a bit of boost today. So not many things are down, but we're definitely seeing quite a lot of positivity.
Well, a stock that should do well today because of reopening in Victoria is Crown, but Crown's got its own particular problems, hasn't it?
Oh, absolutely. It's got a lot of challenge at this point, and now that you've got the Austrac looking at the
fines
issues,
tend to be big too, don't
that's
they?
right. So I think that business certainly represents a lot of hidden value, but at this point, there's so many uncertainties about the licenses and the like. So you can actually see investors now skewing towards the Star. It's a much cleaner pick for reopening of the casinos, and in terms of earnings growth over the next 12 months.
Yeah. Now, a company I know you really like end of last year, but it's had a bit of a bad report, is A2 Milk. Have you reassessed A2 Milk, or is it a stock that you think is in a buying zone and will eventually come back?
Of course. Look, this is actually taking a step back. This is why I love the equity market so much, because stock goes up and down and you always have your second chances. Now, when we picked the A2 Milk last year, again, it was unloved. Remember, it was unloved. People worry about the short-term issues, so fixated on near-term earnings. And then it turned out to be, I think, was top 2 performing stock by March and May. And now that again, because the pull forward in a lot of infant formula purchase, now we're seeing a bit of lull periods and things that's a little bit slow just because people bought so much over there. So our view is that take 12-month view and the stock will be back where it is. So take this opportunity and buy them.
That's good, because in the Switzer report today, I actually said I still like A2.
It's a great company, great balance sheet, it's a great brand, hard to build brand in a country like China. And all you're seeing at the moment, just a short-term disruption to this quarter. And it's already out there in the marketplace and the investors just shunning it because near-term earnings look a bit uncertain.
Any other stocks that you have recently learned to like, or recently learned not to like?
Oh, not to like. Look, I think one of the little one recently we learned to like is called Aroa Biosurgery. This is a little company just listed about 2 months ago. It essentially provides, healing process to burns victims, and it's kind of like the mini Polynovel, if you like, trading at a fraction of the valuation when compared to Polynovel. But it actually has a lot of clinical data to support its product, and it's already signed quite a lot of deals in the last 2 years, and it's got licenses to sell across something like over 30 countries. And
so what's the name of it?
It's called Aroa Biosurgery. It's very small. The code is ARX.
ARX, yeah.
That's right. And then it's actually, COVID has impacted the likes of Polynova and the like because people can't do a lot of those surgeries. But this business actually is doing better than expected, and you should see earnings growing at least 40% a year for the next 3 years. So it's a little bit earlier stage, but it's got a great, very promising road ahead.
Okay, let's run through some of the stocks that some of our audience have asked us about. One is Bravura Solutions. I always have difficulty saying that word, and I always remember Rudy Philippek van Dijk even had more trouble with Rudy's wonderful Belgian accent. Bravura Solutions, what do you think?
Let me not try to pronounce that one with my Chinese accent. So BVS, let's call it BVS. I think this company it's very defensive. It makes product for those large institutions like super funds and the like, provides a platform where those large institutions can consolidate a lot of their softwares and things together. It's won a lot of contracts over the last few years, particularly in the UK, has done very well. Now, what's happening at the moment is that we've just gone through a low period of people wanting, especially institutions wanting to spend money on software businesses. And for these guys, they rely upon the pipeline for the earnings to grow. So, it's defensive, but the issue is that because of the corona impact and because it's exposure to the UK as well, and in the last 12 months, of course, the competitive dynamics changed as well, so it's become a little bit more competitive. So, look, to me, this business is in a tougher position. It's underperformed the relative tech index quite a lot. There will be bottom pickers because it's underperformed, but to me, the earnings not coming back for the next 12 months, and it's going to be quite challenging.
So it's a slow burn. I know
it's a slow burn. It's very defensive. It's not going to move like the afterpace, but I think at some point it represents pretty good value.
Yeah, the analyst thing's got 63.7% upside, but when they say that, you always think, well, it might take a long time to achieve that kind of result.
I think one of the important things about investing in growth company is that what you need the earnings momentum to keep going. They need to beat on expectations and they need to keep growing. For a growth company that keeps getting downgrades, it's going to be very challenging for them to keep up that multiple.
And fund managers like you often do pick up the momentum, don't you? When you see a stock that is really being bought consistently and the story's good, putting those two together, often the momentum does pick up, doesn't it?
It does pick up, and then you get more people hearing about the story, and then you see the execution's great, and then they beat the expectations, then it's just a recipe for great performance.
Okay. This is a company I don't know much about, MNF Group. Analysts think it's minus 3%. So what do you think about MNF Group?
We actually looked into for a while. We actually liked it for a while because its exposure during the COVID period. It has a small division that has exposure to exposure to the Zoom usage.
Okay.
So during COVID time, we thought that was fantastic, and but it is actually only a very small portion of the business. So every time when people click on Zoom and there's a phone number you dial. So if you don't click on the link to go to the web, if you just dial the phone number, they get it clip of the ticket.
Yeah.
We thought this is phenomenal, and it just looked fantastic. But when the result came out, the actual leverage isn't really there. So we didn't quite see that significant earnings uplift. The other rest of the business just not really growing.
Okay.
So yeah, it's
Here's another one called AD8 Ordinate Group, and the analysts think it's got 15.7% upside. What do you think?
Company like that, you need at least 50% upside.
Okay.
Look, I think
Lots of blue sky has
you
to be
need the blue
found.
sky. That's right. Look, I think it definitely got an interesting technology. Provides all these audio sound technology for global players, really. And it seems like it has its own niche and it dominates that niche. So, but the problem at the moment is that there's no earnings growth because of the theatre. They leverage to all that entertainment, conferences,
So is
sound
it
effect. It's a reopening
stock,
theme.
particularly when the world is really getting back to normal. So it might be 12 months or something like that.
This one will be a little bit later because you don't expect huge, the concerts and the like to be
events and
played
things.
for another 12 months. So
Okay.
it will take time, but it seems to dominate its area. So I like it, but it's a longer term.
Vita Group or Vita Group. What do you think?
Again, it's one of those replayed, reopening theme. When the stores are shut, things are definitely very tough. So it has a leverage to that reopening. But to be honest, I think there's plenty of others that you can play to that theme.
All right. Now this is a company that's always been a good service provider to the mining industry. Mining's doing well. Monadelphus. What do you think?
I think there is the opportunity in this one. Most of the mining services company has been under a lot of pressure simply because they just the market is paying attention to the miners and to everything else, or the tech or the miners. And I think with the strength across a lot of commodities, these businesses will benefit. And this one has actually underperformed a fair bit in the last 6 to 12 months. So I think the bad news is sort of in the price, and really definitely should look into adding it going forward.
Okay, so let's just go big picture now, because you've shared a lot of the smaller aspects of the market. Do you think we'll see a vaccine by the end of the year, at least give the tick of approval, and then in the first quarter of next year, more and more people will get vaccinated? Is that your belief, or is that your hope, or is it both?
I think base case assumption is that it will come. There will be news of vaccine before the end of the year. We heard overnight, over the weekend, about AstraZeneca one will be available soon. And by next year, perhaps by June, it should be available to most people. Now, the question is, but this is a positive news flow. So when it gets announced, market will get excited for a couple of weeks. But now the question following on is that the efficacy, or the actual effectiveness of this vaccine is to be questioned, and somewhat might be disappointing.
Because we don't know, or because because it's been proved that it should be questioned?
Well, if you actually look at the study that's been done, is that it's good, but in terms of who can take it, the elderly population can't take it very well, and then all of that. If you start looking into that, then you start questioning, well, then how many people will actually take it? In the US, they did a study, something like 50% of people wouldn't take it, and so
maybe they should be jailed, those people.
Like we're here, you can't go to school without vaccination. So it's so there's a lot of question following that. So, but markets certainly will get very excited, as we saw today, over the next month or so. But I do believe that excitement will be somewhat short-lived as we're moving into the actual data.
Yeah, okay. But given that, 2021, are you confident the market will keep going higher?
I like the market. I think the market, in terms of fundamental, putting aside all the sentiment and the like, the fundamental is doing okay. So our in terms of the the virus rate is continued to fall. We have the reopening continue to now finally taking momentum now within Australia. We have, job specs looks okay. Job data actually looks not too bad. We have consumer confidence doing okay. We have government supporting us, and we have very low interest rates. So all of that together, you actually can see pretty good growth momentum coming through for our Australian market in the next 6, 12, or even 2 years. Things looking good. Globally, there's a bit of uncertainty, and we will go up and down. There's trade war, there's China, there's all of that. But fundamentally, I actually think Australia looked pretty strong. Our banks even doesn't look too bad.
No. Junmei Liu from Tribeca Alpha Plus Fund. I'm joined now by the Director of Investment Behaviour at NAB Trade, Gemma Dale, and we want to find out what are people buying and selling right now. Gemma, thanks for coming on the program.
Pleasure.
So Gemma, so NAB Trade actually surveys what's going on in their business.
Yeah.
And you've found the stocks that are hot and I guess the stocks that are not. So when we start with the stocks that are really hot at the moment.
So it's been quite interesting to watch what's happened over the last 12 months. You know, we've been doing this for many years and as the market sort of ground higher for so many years, the stocks that were in the top 10 were fairly predictable. So it was always the big four banks. You would generally see the big miners in there. It was very much what you would anticipate.
Telstra occasionally?
Occasionally Telstra, that was a bit old now.
Yeah,
you don't see that quite so much. It's not quite so interesting. It's held, it's very widely held. Yeah. It's not traded that often. So a lot of our investors sort of just hang on to it. And if they've still got it, it's kind of it's a hang on.
So I guess there must have been a period where the wax stocks were really important, WiseTech, Afterpay, Ality and all those ones. And then Zero, of course. And then along with kind of A2 Milk, that was really popular for a while. And of course, the one from Tasmania, which is now owned by the Chinese, Bellamy's, that would have been
very popular. So there was a period there when there wasn't a lot to be seen in terms of exciting behaviour in the really big names, and so it was miners and milk. That's what we were seeing. Miners and milk. We loved that. We saw a lot of that kind of thing. The wax stocks were really popular, and then this year everything changed. The one big stock that has been in the top 10, which is very unusual for something that was small to begin with, was Afterpay. So Afterpay's been in the top 10 for probably 3 years now. That's kind of amazing. Not anymore, now it's quite predictable, but 3 years ago that was a bit of a surprise and a lot of our investors have done very well.
I guess Zero snuck in there as well. Like the share price had got to it last week. It was extraordinary, $120 or something like that.
It's done unbelievably well, but it's not that popular. We have a real...
Oh, really?
Yeah, we have a surprising level of... So we've got these high conviction stocks that people hang on to and they love it. And when you see trades, they tend to be very large average trade sizes, and then a lot of stuff that's traded more actively.
CSL and Zero and all that sort of stuff. I guess a lot of fund managers look at these stocks and think, good time to buy it, add to our stock and all that sort of stuff. Yeah, I guess that's true. But Afterpay is the sexy stock in a sense.
Afterpay is the one that everybody holds and everybody trades, which is really interesting. But this year everything changed. It's been quite dramatic how quickly things changed this year. So we've had a lot of cash on the sidelines and it was building up for years as investors went, I'm waiting for a pullback in the market, which didn't come. There's got to be an opportunity to buy things a bit cheaper than they currently are. And then COVID happened and our investors just flooded the market. It was absolutely extraordinary. We saw it right across the market. NAB Trade wasn't unusual, and we saw a lot of new investors as well. So heaps and heaps of people taking all of that capital they had sitting idle and throwing it at opportunities.
All right, so because you're the Director of Investment Behaviour, do you actually look at or try to get a handle on who the people are? Because you've got old stages who've been there for ages, you've got pros who'll be using you as well. But what is the influx of new? I always figure a lot of younger people just can't buy a home, so and the term deposits are so low. They would be thinking the only way I'm going to build a deposit is playing the stock market. Have you seen an avalanche of those sorts of people?
So we looked at all of the new investors we had. So come March, we had a 5-fold increase in new traders, right? So new people coming to 5-fold, 3-fold again in April. So we just saw people coming to market. They've clearly been waiting for an opportunity. We know that Google, the search term, how to buy stocks, has suddenly rocketed. It was amazing. So everyone was suddenly keen to buy stocks 30% off. It seemed like a great idea. And with the benefit of hindsight, it was. It was a brilliant decision. So all of these new people coming to market, we had a look at how different they were to our existing base. The only thing that was really obvious was slightly more women and slightly younger, but both of those things are fairly predictable because most of our base is slightly older and slightly male. If you already have an account, you're more likely to be male and more likely to be a bit older. If you don't have one, you're more likely to be female and younger. So we saw this big influx. It wasn't hugely different to the investors we currently have. And what they bought was unbelievably interesting.
So what did they buy? Did they also buy foreign stocks like Apple? Did Apple become...
Yeah, we did.
It did?
Yeah, so we saw that. So we had heaps of buying...
People didn't buy Apple much, did they?
Oh, no. So on NAB Trade, you can buy international stocks directly. US, UK, Germany and Hong Kong. 90% of it is US. So it's a very, very predictable where they go. And they did buy big international stocks. But what they saw as most appealing in Australia will probably probably surprise you because you've seen all the stories about Robinhood and young people coming to market and blowing up all their capital and taking out their super and throwing it away. We kind of saw the opposite of that. So the top 5 things that they bought were the big 4 banks and an ASX 200 ETF. That's what they bought. So it was the kind of advice your mum would give you.
Yeah, so it's like they've been watching our show and they've been watching the sort of stuff that we've been doing for ages.
Yeah.
So they bought sensible stuff. And it sounds like they're figuring out, we can't get term deposits giving us anything, at least go and get some quality companies. Of course, the big 4 banks have been basically instructed by APRA and the government not to pay big dividends for a while, but the capital gain potential's out there.
I think what's most pleasing is they're very well recognised brands. They're very predictable. They're the kinds of shares, as I said, your parents would have bought and done very well out of for quite a period. So it's something that they feel they understand, even in a pandemic and an economic downturn. There's a solid chance the banks are going to be around, right? In Australia,
2 or 3 years' time, I think it'll be seen as a fantastic trade. At the moment, it's an okay trade, but it'll be a fantastic trade in 2 or 3 years' time. It's interesting. What about the tech stocks? Have they been popular as well?
So buy now, pay later has been the big space. People have been looking for growth, and it has been just extraordinary. So we saw Afterpay for years. Then last year, right at the beginning of the year, when we saw a few new ones coming to market, it was Split It, Zip and Afterpay, and this rotation through the 3 of those where investors were trying to pick a winner. So we saw Zip come back really strongly this year. It is very much loved by our investors. It was the most traded stock last week across the whole of NAB trade by a margin of about 50%.
That makes me happy because I tipped that Zeet stocks would be the next wax ones. So I'm happy about that.
Yeah.
Zip is doing very well. What about, let's just concentrate on foreign for a moment. You said Apple. What would be probably the second most?
Oh no, the most traded is Tesla.
Tesla.
Tesla. So all year Tesla's been our most traded internationally. It has been just so popular. It's extraordinary. I've always wondered whether investors understood that it wasn't part of the S&P 500, and so they were buying the S&P 500 plus Tesla to ensure they were getting the market plus the biggest growth stock there was. But it's also the sector. The EV sector is just so popular with our investors. It's amazing. So they've also been picking up NIO, which is the Chinese version, and then they've been looking for the other opportunities in the space. So last week we saw a stock called Workhorse, which is a truck manufacturer, not a pickup truck, which is one of the other options. It's an actual truck manufacturer, and they are going for a contract with the US Postal Service, which said they will move to EVs, and that contract was put on hold.
Electronic vehicle.
That's right. I'm sorry.
Yes,
I
do.
You get used to the
terminology. She's such a groovy person. She's right.
The terminology gets stuck in your head.
Yeah, groovy is probably another word, so I shouldn't probably use that one. All right, what stocks have become really unpopular?
What's interesting to see, so the ones that are very high conviction but are not traded except by a small group of very wealthy people, CSL, Fortescue, Macquarie. Those 3, they're enormous Australian companies. They're consistently very successful. They are very narrowly held within the base. CSL is only held by 10% of our investors, which when you consider that it's Australia's largest company is extraordinary, right? And its run has been amazing, and yet only 10%. So when we see it move, the average trade size will be over $100,000 for something. So we saw Dow in the last 2 weeks just become unbelievably popular as a trading stock. It's really, really mixed. So we don't see a swing to the buyers or the sellers. We just see people moving it really, really fast, trying to pick up something in the margin. But the average trade size on something like that is between $5,000 and $10,000. CSL would be $100,000 because it's only large amounts moving in and out.
So, and are you seeing professionals selling allegedly at the top and then buying again at the bottom, and they're just doing that trade?
So what we've seen in the last couple of weeks is the market's come right back. So it's at 6-month highs. It's doing really well. It seems to be holding above 6,000 points. A lot of companies like CSL, CSL's not back at its highs, but it's doing very well. So a lot of our investors are trimming and profit taking at the moment. So we saw a big shift to selling on average last week. That's quite interesting to see.
Okay, just give us one last stock. Do you think it's going to be the hot one? Given the trend, we won't hold you responsible, but looking at the trend, which one do you think is going to be the standout stock?
So this is not a pick of mine, but one that our investors just keep coming back to is Mesoblast. So it's down 45% since the unfavourable position from the FDA. They've got to go back and do another trial. They're trying to get some approvals while they do the trial. as I said, it's down 45%. It's been absolutely
Are
hammered.
people piling in now
They
because
really
it's a low price,
Yeah.
thinking one day it's going to get crystalline?
I mean, they've been doing that for a decade, right?
Yeah.
Mesoblast.
Right.
It's been a wild ride, but it's really interesting to see in the last 2 weeks. It's really still in there in the numbers. We've got plenty of people.
I
who
bought
think
for the
it's worth
first
a
time
buy.
today, Phil. I thought, well,
Did you?
I've interviewed Julia Lee for years talking
Yeah.
about Mesoblast.
Yeah.
About time I got some part of it. So
Yeah.
but I figure a 6 or 12 months to wait. But it's interesting, isn't it?
It bounces fairly regularly on news and anticipation of news, and clearly we've got plenty of investors who think that there'll be an opportunity to do something with it.
Great insights, Jim Adele. Thanks for joining us.
Thank you so much.
That's Jim Adele from NabTrade. Well, joining me now from lockdown Melbourne is Prime Value's portfolio manager, ST Wong. Great to see you, ST.
Good afternoon, Pete.
I guess, I'm thinking about the social implications of being locked down. They can be terrible. Some people may well enjoy it when they're working hard in offices all the time. But from your point of view, it doesn't really change the way you analyse companies, whether you do it in an office or whether you do it at home, I guess.
It doesn't, Pete, but we do miss the opportunity to sit face-to-face across CEOs and CFOs and look into the eyes and get a judgment call, make a judgment call what they're telling us is achievable, it's credible, and stuff like that. So we miss the body language aspect of interaction, and that's a downside.
Yeah. And you're right. Even though you can see someone on Zoom, it's just not the same kind of thing, is it?
Absolutely.
All right. Let's go through and explain to my audience who might not have seen you before, what is the investment strategy that you use in trying to work out whether you like a company or not?
Well, very simply, we're looking to be part owners of it, the business we're looking to invest in. So in effect, we're looking for a couple of things. One is the quality of management is very important for us because we believe that people do lead the companies that we invest in, and the company's management by proxy are, I guess, an extension of what we do on how we allocate our funds. So we want our managers to be top-notch in terms of allocating resources to the right areas and to be able to generate good profits, which means we're looking for good business models to buy into. And on the back of that, growing businesses that we as shareholders can participate in capital appreciation 3 to 4 years down the track. And top it off, of course, is a decent valuation. So from our perspective, we do shun, I guess in a snapshot, blue sky stories. We'd like to invest in companies which are already making profit and are showing evidence that this profit is growing on a year-on-year basis. That helps us to be quite focused on what we look for, and certainly from what we and who we invest with, basically, Pete.
Okay, so did the coronavirus and the whole market crash ultimately give you a big pool of companies that were mistreated by the market in the short term?
Absolutely. It's been a tremendous opportunity to invest our clients and our own funds into the market in the last 6 months. The sort of successes and the likes of investment ideas we found has been quite diverse, I must say, but it had thrown up a number of opportunities in the last 6 months, just because of the valuations that have come off in the last couple of months, but also the acceleration of trends we see in the marketplace. And most importantly, I mentioned right at the start, the sort of management we invest in are coming out of this COVID situation much stronger than they entered than they entered the pandemic.
Okay, so now a lot of people know that lots of new entrants have come into the market and they've actually bought pretty good quality stocks and driven the share price up. And some people say there's not a real lot of value left. But if you look at the All Ords or the ASX 200, we're still 13% below where we were before. So there's got to be some companies that haven't been completely snapped up, and there must be some value. So what few companies at the moment have you bought recently that you think look like really good value going forward?
Yeah, good question, Pete. From my perspective, a couple of names, a couple of companies come out. I like to bring up the whole aspect of how mortgages have actually been doing quite well in the last 6 months, despite the recession we've had. And the banks have traditionally been, I guess, the beneficiary of mortgage growth. But Australian Finance Group, the second largest mortgage broker exposure, have also been doing quite well. And that's a company I've been buying in the last couple of months, primarily because valuations are quite cheap. It's about 15 times at this juncture. Dividend yield about 4.5% on a net basis. But in itself, it is also doing quite well because consumers, you and I, the person in the street, is actually finding mortgage brokers much more beneficial to get a loan because bank branches, for example, have been shut. But more importantly, to help consumers through the myriad of loan packages in the marketplace, mortgage brokers have actually found themselves quite a good business the last couple of months. And this is a company I've been buying into as it recovers from the COVID lows.
It's interesting you should say that. I interviewed the CEO of Mortgage Choice, Susan Mitchell, for the property show. And she said even in Victoria, the amount of loans that are being refinanced are quite extraordinary because people have got time to actually think about their own personal finances rather than necessarily always thinking about work. So you're probably on the right trend there. What else do you like, mate?
IDP Education. That's a stock which got hammered in COVID in the March April lows where COVID situation is concerned. Again, education, English testing, English language testing across the globe, student placement across US, Canada, Australia, and the UK. Obviously, we've seen this just international students disappear out of Australia because of lockdown. But activity has actually been increasing month on month since then. So this is one of the companies I've been, I guess, adding to as we come out of the COVID situation, the reopening scenario, so to speak. And this again is one of the companies which I feel has come up much stronger than competition from the COVID-19 situation. It is, I think, gaining market share, net cash, which is a great thing. And I think in the next 2 to 3 years, it will begin to build on its digitization strategy. I think that will help the company grow quicker into the next couple of years.
And I guess it's fair to say that some parents who might have thought that they needed to get their kids educated face to face have actually experienced it online and probably finding it to be an okay alternative.
Absolutely. I think it is a whole spectrum, right? It's from working from home, and education from home is certainly part of that dynamic change where consumers is taking on board. I mean, we are buying tons of stuff from home, right? And again, this is a structural change, the consumer behavioral change that is cascading through workplaces, schools, education, and obviously how consumption is being handled.
Yeah. For those at home who don't know what you're talking about, what's the ticker code for IP Education?
It's IEL.
Okay. One final one. I don't let you off too easy, ST Wong. Okay. The final one.
One I've been tracking very closely is one on the large end of town, ResMed, market leader in respiratory medical devices, well known within the Australian market. Had a difficult last quarter, where its share price is concerned. Some short-term concerns on ventilator sales coming off as COVID declines, but also access to, I guess, hospitals and medical offices that's been shut down predominantly in the US. That's been impacting sales in the short term, but in the medium to long term, I think that will recover, and this is probably a great opportunity to step into, what I call is a world leader in medical devices for respiratory ailments, sleep apnea specifically. Certainly one I've been tracking very closely.
ST Wong, great to see you, mate. I hope they release you ASAP and enjoy yourself going forward.
Thanks so much, Pete.
That's the show for this week, and if you want to attend our Investor Strategy Day, which of course will be online and you'll get it through Zoom, just click on the link below in the description below and you'll attend our Investor Strategy Day, where some fantastic fund managers, some really good investment ideas will be given to you for absolutely free. See you then.